Hello traders and welcome to another video review. Today is Friday, June 9th, 2023. Let's take a look at the Forex calendar for today. As you can see, we got only two very important data released today. Interest rate decision from the Russian Federation scheduled for release at 12:30. The actual reading is 7.5%. The forecast is 7.5% as well. Employment change data from Canada scheduled for release at 2:30, and market participants expect the employment change to drop from 41,000 to around 23,000 people. So, not too many data at the end of the trading week. Nevertheless, we should jump to the next section, which is of course the technical analysis, and take a look at the US dollar to the Canadian dollar time frame, 4 hours time frame chart. This is the US dollar to the Canadian dollar 4 hour time frame chart, and as you can see, we are still moving lower. And recently the market, let me just zoom in, the market rejected the 50 periods moving average around the level of 1.3387. So let me just sum it up for you guys. So we got the level of a technical support here, 1.3334. This level had been violated briefly. 26 pips was the violation, and we got one more apparently level of the technical support here, very important level, 1.3314. So the market had been trying to bounce from these levels. Apparently it didn't actually went well. As I said, the market recently was rejected from the level of 1.3387. This is the technical resistance level, and of course this level is very close to the 50 periods moving average. Then the market had made like a 3 inside bars, and we have a breakout to the downside. Now the situation on the US dollar to the Canadian dollar pair is very in favor of bears, because the momentum is negative, the momentum is very weak. The bulls don't have a chance to break above the level of 50 so far. So the outlook remains bearish. We have these two technical support levels to be tested and maybe even violated in the nearest future. Let's now take a look at the market of the US dollar to the Swiss franc. There you go. Why? Because there is very important breakout to the downside that happens just recently. Let me put the channel on this chart, so you can see that the market has been moving inside of the very steady channel. Let me just find out. We have a fork, we have the pitchfork. What else do we have here? Maybe channel is here. There you go. So what I was standard parallel channel. So we've been moving inside of this channel for quite some time. As you can see, very nice channel was done, and then we've made the high was made at the level of 9,146. This is the technical resistance, and since then we've been moving lower. The next technical resistance is 9,118, and the most recent one is at the level of 9,106. These technical resistances were still inside of the channel. The market has been testing the lower channel line again. Finally, after third attempt, we have the breakout to the downside. We broke below the technical support located at 9,013, and the recent low was made at 8,984 pips. So we are trading way below the technical, the old technical support. Now it's of course the technical resistance. The next target is 8,940. This is the low from the May 22nd, 2023, and the immediate technical resistance is still located at the level of 9,013. So the outlook remains bearish. However, the market conditions has hit the level of 30, which means the extremely oversold market conditions on a 4-hour chart has been hit. Nevertheless, the bounce was very shallow. So the market is still under the control of bears, and there is still big pressure on the market participants. We should see lower levels on the US dollar to the Swiss franc soon. The other related market is the US dollar index. Let's take a look at the US dollar index, because it looks like we have some divergence between the US dollar index basket of the currencies and the behavior of the US dollar related pairs. So what do we have here? First off, on the 4-hour chart, we have a technical resistance 104.64. Okay, the next technical resistance is a little bit lower. The next technical resistance is located at 104.37, and as you can see, the market recognized the 50 periods moving average. Sorry, 100 periods moving average. Okay, and we got the bounce from there, resistance, then another attempt, then the resistance worked again, and the market was already testing the 50 periods moving average as well. So we have another bounce, another move to the downside, bounce from the 100 periods moving average, and then definitely we have a breakout lower. So now the intraday technical support is 103.35, right? So that's the low from the June 2nd, 2023, so not that old at all. And it looks like we hit the extremely oversold, almost hit extremely oversold market conditions. 32 points was the lowest level of the RSI. Nevertheless, it means that there is a bounce possible, or a pullback on the US dollar index. So US dollar related pairs should go lower. However, this is very limited pullback. It looks like a very limited pullback, maybe towards 103.61, where the 100 periods moving average is, maybe towards the 50 periods moving average. But this area here is very susceptible for another movement to the downside. The market is still under the bearish control, okay, and this movement for the whole May and the part of the June might be just simply finished. Okay, so we have some kind of a distribution here, and we should see movement to the downside on the US dollar index. All right, so the next market we would like to talk about is the market of a Bitcoin. Why? Because there is something going on this market. It looks like the market is not doing much these days. Okay, that's fine, but as I told you last time, it's moving inside of the very narrow range. 26,813 is the upper channel, upper level for the trading range. 26,118 is the lower level. Okay, so we are waiting for a breakout either to the upside or to the downside. But in the background, we have downtrend, okay, that made a new local low and swing low at 25,442. Very nice V-shaped reversal from that level happened, okay, but we already retraced more than 61% of this bounce, and right now we are waiting for the market to follow the bullish momentum and follow higher, follow towards move higher towards the level of 27,452. So this is the next technical resistance. Okay, nothing like this happens. The market going up and down, up and down, up and down, up and down. Whipsaw trading conditions in a tight range always like an indication of a bigger move. So something is cooking here, something is going on here, and we should wait for a breakout above this technical resistance, intraday technical resistance, and the range high, all this range low or intraday technical support. okay, because right now the market doesn't know where it wants to go. The market is confused. Bears are very strong and pushing the market lower, but bulls, when they smell the blood, they can do the V-shaped reversal, but they do not continue higher. Instead of that, they move lower, more than 50%, more than 61%, and then there is nothing happening. So bears are only waiting to extend the drop lower, because in the background the trend on the Bitcoin is still bearish, is still to the downside. There is a downtrend on a Bitcoin. There is a downside pressure on a Bitcoin. So this V-shaped reversal might be a fake one. There is no high made after the V-shaped reversal above 27,452, okay? And there is no continuation after a period of the, I don't know, pullback, consolidation or something like this to the upside towards this high, for example, 28,446. So it looks like something is cooking here. For now, momentum is roughly around the level of 50, so, you know, neutral level. We should wait for the trigger that will show us the next direction on the Bitcoin, but the outlook is much more skewed to the downside because of the higher time frame trend being still the downtrend, basically. Okay, so that's my outlook for the Bitcoin and the rest of the currencies. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.